What's up everyone, Dylan here. I wanted to hop on to do another episode of the weekly analysis video. With that said, we'll hop right into it. The S&P managed to make new all-time highs as of today, as did Bitcoin, as did many other things. Basically what we saw was a total risk on market, okay? What has been going on to get to this point? Let's talk about it. Okay, the first thing I want to mention is my critical level down at 57.25-ish has been hit. Okay, not only has it been tested this week, but it produced a crazy move to the upside. Okay, this is a level that I have talked about numerous times on this channel and numerous times in the Discord as well. Okay, so there's nothing new here. Okay, why is it critical? Why is it so important? Because it has acted as key resistance and support in the past, right? It acted as key resistance back in late August and early September, and then once it broke to the upside, it then retested it numerous times, 4 or 5 different times in early October. Okay, then S&P went on to make new all-time highs. Then it came off right into this Monday, tested almost identical to that exact point, right? It broke that line by 3 ticks. Basically, like I said, basically bottom ticked at that key area, and then since then it has been a rip your face off type of rally, right? Squeeze to the upside. So what happened? Why did we bounce there? What context was present there? And I'm going to get further into it in terms of other aspects to back that bounce up as well. Okay, so let's talk about it. First off, 57.25, like I said, it has proven to be a key support and resistance area in the past. Okay, that's one thing. Another thing is the fact that US 500, which is the cash index of the S&P 500, had the 50-day moving average, okay? That level on the S&P 500 futures lined up almost perfectly to this 50-day moving average on the US 500, right? 50-day moving average, 100-day moving average, 200-day moving average. Those are all very, very highly respected moving averages that tend to act as support and resistance, okay? Especially when they align with other pieces of context like this example, okay? So not only did it test there once, twice, or 3 times, but it actually tested 4 different days before ripping to the upside, okay? So we have the S&P 500 futures 57.25 level, and we also have the 50-day moving average on the cash index. That wasn't the only two. We also had the VIX lagging, okay? Let's talk about this. I'm going to go ahead and remove these levels. Okay, I'm going to go ahead and draw a level at 20, which is a psychological whole number, okay? Tends to act as support and resistance, okay? I want to preface this by showing a Discord post, okay? This was posted about 6 minutes before the test at 57.25 on the S&P on Monday, okay? So I said, as ES approaches that level, right, and this is the level that I was referring to, which I had mentioned numerous other times, the bulls must defend. They have NASDAQ still being above 20K and VIX being below 20 on their side. No guarantees in trading, but bulls technically have the advantage here. Okay, I was trying my best to make it very, very clear that the bulls had the advantage, and you know, in other words, they had the probability was in the bulls' favor. Okay, and as a trader, when the probability is on, you know, a certain side's favor, leading into a critical level with other pieces of context, you take the trade. You don't need to know 100% certainty that that trade's going to work. That will never be the case. You will never know if a trade's going to work ahead of time. However, when the probability is in your favor with different pieces of context, that is when you strike, and like I said, you want to take those types of trades. So when this was happening, this is what I was seeing, okay? So S&P came down, okay? I'm going to go ahead and mark the previous day low, okay? The previous day low was at 57.40. It had bounced there earlier in the day on Monday, okay? Bounced up, then it came back down, okay? So let's go into a smaller time frame here. So after, say, 11:40 a.m. Eastern Time on Monday, we had broken below the previous session low, or the intraday low, and the previous day's low, if you want to count Sunday as a different day. Okay, so when that occurs, what should happen is that the VIX futures should also break above the session highs. They should move in tandem. Okay, when S&P futures are breaching intraday lows with momentum, especially with momentum and acceleration, okay, the VIX futures should break session highs. Okay, so like I said, let's go over these time frames. 11:40 is when the S&P broke session lows. From 11:40 to 12:05, which was when the test occurred at that critical level. Okay, so from 11:40 to 12:05. Okay, going towards the VIX. Notice this was the high of day for that session, Monday. Okay, from 11:40 to 12:05, not only did it not take out the session highs as it should have, right? It wasn't even close. If we want to do a percentage base, it was almost 2% away from those session highs. Okay, that was one thing. The second thing is the fact that it was rejecting at a psychological whole number. That's two more confirmations: a lagging VIX and a failure at a psychological whole number. Basically, what that implies is that the downside pressure on S&P futures is going to be short-lived because the VIX is lagging, okay? So that's another piece of context that we had on our side as bulls, okay? On top of that, the NASDAQ was making a higher low. So despite the S&P making a lower low, right? This was the initial low right here on the day, okay? Then it was breaching that session low and heading lower. The fact that that occurred, right? The NASDAQ never took out the existing session lows. On top of that, not only was it showing relative strength, making a higher low, it was still above the 20,000 psychological whole number. Okay, so like I said, let's talk about this. Let's rewind. Let's take a step back. S&P 500 futures critical level at 57.25. US 500 cash index at 50. The 50-day moving average. VIX lagging and VIX failing at a psychological whole number, plus NASDAQ still being above 20,000 and making a higher low. We have 5 different pieces of technical confirmations that are telling us that this test at the critical line of 57.25 is probably going to work. Keyword probably, okay? The probability was in the bulls' favor, as I wrote in the Discord, okay? So, like I said, as a trader, you see these things happening in real time, you get ready to take action, okay? Now we're going to switch into areas that are aspects that were bullish that aren't necessarily on the technical side of things, okay? I have some notes in front of me, so you'll see me looking down, okay? So, first thing is the seasonality aspect, okay? Let me actually take a step back. The first thing is the fact that this happened one day ahead of the election, okay? This is a tweet from Elite Options, okay? Elite Options Trader, okay? Election day trend. The market has closed green the last 5 election days. Today shouldn't be any different, okay? Right? He goes back 2020, 2016, 2012, 2008, 2004. As you can see, the last 5 election days all closed greens, okay? So this test occurred one day ahead of that, okay? I had that information. I just wanted to show you guys his tweet in particular because it showed it very, very clearly. I knew that information, that seasonality wise on election days, they tend to be green. Okay, so when you have a critical level being tested one day ahead of election, and elections tend to be green on the day of the election, it just boosts the whole probability. Okay, on top of that, the seasonality aspect. What do I mean by seasonality? These are real facts. Okay, in election years, the S&P 500 yields an average return of 3.38% from November 5th to December 31st. Okay, that data is from 1928 until now. Okay, on top of that, historically, the NASDAQ yields an average return of 5.53% from November 5th to December 31st, and that data is spanning from 1985. Okay, so that's another thing. Okay, the seasonality aspect tends to be bullish between election day, November 5th, or not even election years, but November 5th to December 31st, the seasonality inflows tend to be positive. Okay, on top of that, I mentioned this in the accelerated program in the Discord. The corporate buyback window opened up last week. So last week, or before last week, there is a blackout period in corporate buybacks. Okay, and just last week that reopened. Okay, so this is from Goldman Sachs. Goldman Sachs corporate desk estimates that $960 billion worth of executed buybacks have occurred in 2024, and they expect over $100 billion worth of share repurchases to occur in November. Okay, from 2007 to 2023, the vast majority of corporate buybacks occurred in the month of November. Okay, which just so happens to follow right after the earnings period. Okay, so they estimate that about 10.4% of buybacks over the full year are going to be done in November. On top of that, Goldman Sachs estimates that $6 billion worth of daily VWAP demand will occur in the 19 trading days of November. This may also have more potential demand impact during lower liquidity days in a late month Thanksgiving, holidays, and vacations. Okay, so that's that. So basically, what is a corporate buyback, right? Corporate buyback is a unbiased, no emotion purchases of shares of a company shares, right? So big corporations that trade in the S&P 500, Dow, Russell, NASDAQ, so on and so forth, will come out and buy shares back on their own companies. Okay, so that adds a ton of buying pressure to the market, right? Like I said, they do it regardless of whether the market moves up, down, sideways. Okay, it's unbiased. It is a good source of bid liquidity. Okay, so that's another thing. The other thing, the last thing, is FOMO. Okay, picture a lot of people probably missed out on this move. They got cold feet. They said, oh, let me wait till after the election. No one knows what's going to happen. There's a lot of uncertainty, so on and so forth. So if you see this move happening in front of you, okay, if we want to do a percentage basis, the market, the S&P, has rallied over 4% in the last 2 days. That is a significant move to the upside, or I should say the last 3 days. But regardless, that is a significant move, right? If you miss that, you now have FOMO, and you're more likely to chase highs, which in return give the overall market more buying pressure to the upside. Okay, I'm not saying that this move is going to continue to the upside. I took my full position off the table that I got into at I got in at 57.34. If we're going to be be exact here, but I'm out. Okay, will it continue higher, and will I miss out on the additional move to the upside? Maybe. Okay, so why was the Donald Trump win positive for the market, right? I'm sure I'm going to get that question, so I have an answer for you. This is from Tom Essay, who is a market analyst. Okay, he said the market views Republican policies as more pro-economic growth than Democrats. including Republican platforms of deregulation and tax cuts, which can boost corporate profits and consumer spending. From a broad standpoint, this outcome could easily see the S&P 500 trade through 6,000 before year end. Okay, the S&P 500 rallied after the Republican sweep occurred in 2016 as well. Okay, on top of that, I also posted this today at the end of the day. Okay, this was from UBS Rebecca Chiang. Okay, as written on November 5th, Wednesday's intraday move is key for the next 1 to 2 months. If SPX upside does not reverse today, the rally will likely continue for the next few weeks based on historical observation. Whether this is just part of a choppy market or a true breakout will depend on if intraday recovery score turns bullish and retail investors stop selling before the end of the year. Given today is not likely to reverse at this point, I would buy upside for the next 1 to 2 months, targeting SPX up 4 to 7%, which aligns with what Tom Essay said, which I just read before that. Okay, so here's the picture that the UBS analysts put. Like I said, is this guaranteed? Are these things guaranteed? Absolutely not. But I'm just telling you the significance behind when these type of factors align with a key technical test as well. So when you have this combination of different pieces of context, it's worth noting. Okay, so I don't want anyone thinking like, oh, why did we rally? Or, oh, like Donald Trump got in, he's doing the tariffs, it's going to be more inflationary, we can't rally. This rally's crazy, it's overextended, we're gonna crash next week, right? If you think like that, you're going to struggle in the market. Okay, could we move to the downside? Of course. Could we crash? Yes, but it's unlikely based on historical data and where we're at, right? The S&P made new all-time highs today. Okay, so with all of that bullish information, I'm now going to get into one thing that is a problem that, we don't know what's going to happen, but I want to point it out to you just so that you have an open mind that there are always going to be bullish pieces of context and bearish pieces of context in the market at all times, okay? So what I'm going to talk about is TNX. TNX is the 10-year Treasury note yield, okay? If we look at TNX, right, I'm going to go ahead and draw a trend line, okay? Actually, I'm not going to draw that trend line yet, okay? I'm going to show you guys, I'm going to tell you guys something, and then I'll get into the actual technical analysis, okay? So, this is from, I believe, JP Morgan. Back in 2016, when Trump won, the SPX traded at a 18.5 to 19x valuation, right? 10-year yields were below 2%, and the corporate tax rate was 35%, and the nation's debt to GDP was around 75%, okay? Now, those numbers are 22.1x valuation. That's based on a 268 EPS number for 2025. 4.4%, 21%, and 125% respectively when talking about 10-year yields, corporate tax rate, and the nation's debt to GDP ratio, okay? Meaning that stocks are more expensive, yields are much higher, and the corporate rate can't be cut much further, and the nation's debt capacity is quite full, okay? So that's bearish, okay? Now, is that going to weigh on stocks? Who knows, okay? I just went over the bull case, and I gave you guys a bunch of different factors in the bull case, and this is the bear case, okay? But I always say with these cases, you need to have technical analysis that allows you to have a clear roadmap of when these pieces of information flip, okay? So, based on that information, I'm going to go ahead and draw a trend line, okay? This trend line is going to help me figure out and determine if that issue becomes worse. Okay, when I say issue, I'm talking about the valuation, the 10-year yields, the corporate tax rate, the nation's debt to GDP ratio. All those things right now are way worse off now as opposed to when Trump took office in 2016. Okay, so if this 10-year yield breaks out of this, this trend line resistance, it could start to weigh on stocks. Could it break above and rip to 5% and not affect stocks? Yes. But I'm going to go ahead and use this trend line to kind of give me a general idea of when it can start really affecting stocks more than it is now. So the fact that it's rejecting at that resistance trend line and could potentially roll over to the downside, that would be beneficial for stocks. However, if it continues to the upside, breaks out of that trend line and really starts to gain more traction to the upside, then I will use that context in case I see any areas of resistance on S&P, NASDAQ, so on and so forth. Okay, so going forward, the S&P is in uncharted territory. We are in all-time highs, right? We are in an area that we have never traded at before. Okay, going forward, I'm going to go ahead and look at the previous high of day, or the previous all-time high, which was right around 59.28. For the time being, I'm going to use that area. You could give it some cushion. We'll give it cushion down to like 59.18. Okay, this was previous resistance. I'm going to use that area in the near term to figure out if the bulls remain in complete control. Okay, I'm not saying that the S&P cannot sell off. I'm going to use 59.18 to gauge relative strength and weakness in the very, very near term. If bulls cannot defend there on retest, we could go lower to test, lower areas where the risk reward is more appealing for bulls to reload. Okay, so that is what I will be looking at going forward to gauge relative strength and weakness in the S&P. On the NASDAQ, we have not broken all-time highs on the back adjusted contract. Okay, B80J. This is contract for adjustment, or adjustment contract changes for the futures. Okay, what that means is basically whenever the S&P and the NASDAQ roll to a new contract, that setting gets rid of the gaps and adjusts the price of the new contract without the gap. Okay, so with that setting turned on, we have not taken out the all-time high, so that is going to become that is still important, and if the NASDAQ continues to run up to that 21,216 level, I will look to assess how price acts around that area. Okay, so that's the key upside area going forward, especially because S&P is at uncharted territory and there's really no clear resistance areas above. So that's why it's important to use other indexes that may not have broken to all-time highs just yet. Okay, so that's it for me. Hopefully you guys learned some stuff. If you have any questions, feel free to comment below, and I'll talk to you guys next week. Peace.